Let's talk about S Corporation, all tax forms you need to file. So here's an overview I want you to pay attention to. So first of all, basically you have, so when you have an S Corporation, you got to understand that you have a pass-through tax entity, right? This means that instead of an S Corporation itself paying federal tax on its business profits, the obligation to pay those taxes passes through to the corporation or shareholders, okay? However, this doesn't mean that S Corporations themselves are simply ignored by the IRS. On the contrary, because an S Corporation definitely is recognized by the IRS as a separate entity from its shareholders and is required to file various returns and other forms with the IRS every year, every quarter, every month. So let's first talk about Form 2553. So this is a S Corporation election. Basically, S Corporation election means what? It means that an S Corporation starts out life as a traditional C Corporation formed under state law. Then at some point after filing corporate formation papers with the Secretary of State or equivalent state office, and possibly immediately after formation, the shareholders formally consent to the corporation electing S Corporation tax status. So the cool thing is that the corporation must also meet a few basic requirements in order to be eligible to make the S Corporation election. So namely, there must be no more than 100 shareholders. There must be only one class of stock, and shareholders can only be individuals or certain types of trust, estates, or tax-exempt organizations. No partnerships, corporations, or let's say non-resident alien shareholders are allowed when it comes to S Corporation. So you can see actually on the screen right now, here is a Form 2553, and this is how it looks like. So you have several parts. You have Part 1, Part 2, Part 3, and so on and so forth. And one thing I want to say here is that if you have unanimous shareholder consent and your corporation meets the foregoing requirements, you gain S Corporation status by completing and filing IRS Form 2553. The form is straightforward, but you will need each shareholder to provide consent on the form. So this is kind of important. And one thing I want to say also is that the form you can actually outsource the filing of the form to a third party, a tax preparer. That's not a problem. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Another form that you need to really acquaint yourself with if you're thinking about S Corporation, you have a Form 1120S. So this is S Corporation tax return. And so like a traditional corporation, an S Corporation must file an annual federal tax return. But nonetheless, because an S Corporation is a pass-through entity, more of the info included on an S Corporation's federal tax return is for informational purposes than a traditional corporation's tax return. So when you file, if I were to compare and contrast 1120S to 1120, basically 1120 you're paying taxes, but 1120S you're not paying any taxes. 1120S is an informational return. So this is important. So an S Corporation files a federal Form 1120S. Much of the substantive information on the return reports on the S Corporation's income, deductions, and payments, such as estimated tax payments. But when you think about Form 1120S, it's important to really understand that Form 1120S is due actually by March 15th, whereas a Form 1120 is due by April 15th. So Form 1120 is due March 15th. You also have to file all the Schedule K1. So the shareholders or the partners, for that matter, have the data before filing their own personal income tax returns and actually report that data on Form 1040 and also their Schedule C. One thing I need to say also is that when you analyze Form 1120S versus all the other forms, 1120S requires more preparation in terms of record keeping, as the IRS is really stringent when it comes to things like reasonable salary, okay? And because the IRS has noticed that there is a tendency from some taxpayers not to not to pay themselves any salary at all. So the IRS requires that you actually pay yourself. If you have elected S Corporation, you got to pay yourself salary, and that salary must be actually reasonable. So reasonable compensation is really the key here. And so we have actually dedicated another show to the whole notion of reasonable salary. So if you're interested, please go watch that show or let us know, and we'll just direct you to the video. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about S Corporation, all tax forms you need to file. You also need to think about Schedule B, other return information. And so when we talk about Schedule B, we're talking about a form that is pretty elaborate, pretty comprehensive when it comes to providing some kind of information. And so Form 1120S includes Schedule B, other information. And the information required on Schedule B mainly includes information about any stock the corporation owns in other corporations. So we're talking about if you have a parent subsidiary sort of relationship or some kind of external investments, you have to report this on Schedule B. And also information about any ownership interest the corporation has in any partnerships, and also whether the corporation's total receipts for the year were less than a certain amount, and also whether corporation's total assets at the end of the year were less than a certain amount. So this amount changes every year. This is why we're not giving you an amount here, but the amount actually is adjusted for inflation, and the IRS just want to categorize the S corporation that they are dealing with. So regarding the last item, if the corporation total assets at the end of the year are less than the designated amounts, the corporation doesn't need to file additional Schedule L balance sheets per books or M1 reconciliation of income loss per books with income loss per returns with its Form 1120S. Now, when we talk about reconciliation of income or loss per books with income or loss per return, we are indirectly or directly talking about deferred tax assets and deferred tax liabilities. Now, deferred tax assets and deferred tax liabilities have tax consequences, as the name implies, but it will be too long to actually talk about it here. But those assets or liabilities actually arise from the temporary differences between the amounts that you report to the IRS versus the amount that you report in your US GAAP financial statements. So here, when we're talking about financial statements, we're speaking about not only balance sheets, we're also talking about statement of income, so your P&L, your profit and loss, but also your cash flow statements, but also your statement of owner's equity. You also have to think about Schedule K, summary of shareholder information. Do not actually confuse this with Schedule K1, okay? I'll talk about Schedule K1 later on, but first you want to talk about Schedule K. So this is a summary. So S corporations also must file a summary of information regarding income, deductions, credits, or other items that pass through to the corporation's shareholders. So you provide this information, actually this summarized information to the IRS through Schedule K. Shareholders are pro rata share items. You include Schedule K when you file Form 1120S. And so this is really important. You also have Schedule K1, which is actually an ancillary piece that comes from Schedule K. So Schedule K1 is individual shareholder information. You can see this on the screen here. What happens here is that Schedule K1 is providing more granularity to the IRS when it comes to income items, expense items. You also have deduction items and so on and so forth. So after the end of your S corporation's tax year, the corporation must issue a Schedule K1 and to each shareholder. It goes to each shareholder. So if you have like 100 shareholders, the form must go to all of them. The S corporation also must provide each shareholder with an accompanying set of shareholders' instructions for Schedule K1. And one thing I want to say here is that each Schedule K1 is specific to a particular shareholder, and among other things, provides information about that shareholder's share of the income for the S corporation for the preceding tax year. So the IRS, again, even though the S corporation is not paying taxes while filing a Form 1120S, the IRS wants to make sure that the agency is able to trace income from the S corporation to the shareholders. So what happens here is that when the shareholder is filing his or her personal tax return with his or her Social Security, the IRS will trace the data that they received from the S corporation to the data that the shareholder is actually filing with the IRS, including things like income, losses, and other deductions. We also need to think about, and everything actually flows through Schedule C, and the IRS pays attention to make sure that that data actually matches. And among other things, when we talk about information about the shareholder's share of the income for the preceding tax year, we're speaking about things like ordinary business income, income from rental, real estate, dividends, and royalties. Okay, and so yeah. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about S Corporation, all tax forms you need to file. You also need to think about employment tax forms. This is an important element. So if your S corporation has employees, it must withhold employment taxes on their wages. And this actually applies to every single state where the S corporation operates. So if you operate in 10 states, you have to actually file employment tax forms on all those 10 states. And moreover, as a rule, any shareholder in your S corporation who provides services to the corporation must be paid a salary. So this goes back to what I said earlier about reasonable salary. So simply because you're paying a salary doesn't mean that you just gonna give the person peanuts. No, you got to give the person reasonable salary. It has to be reasonable. And the same goes for corporation officers, regardless of whether they are also shareholders. And shareholder employee salaries are subject to employment taxes in the same way as the salaries of other employees. Okay, and again, everything applies to every single state where you are operating in. So simply because you are operating in 10 or 20 or 50 states doesn't mean you are allowed to consolidate state employment tax forms. I mean, federally you can consolidate things, not a problem. But statewide, you have to actually file each state employment tax forms for every employees. Okay. And so taken together, what happens here is that your S corporation must periodically withhold, report on, and pay employment taxes for employee and shareholder employee wages and salaries. And as part of the payroll tax process, your S corporation must periodically pay money to the federal government, also to the state governments using electronic funds transfer. And in addition, your corporation needs to file quarterly employer tax returns. So this is actually Form 941. Moreover, after the end of the year, the corporation must issue each employee a Form W-2, which is specific to that employee. You must file copies of the W-2s along with a Form W-3. So Form W-3 is kind of interesting because it is transmittal of wage and tax statements with the federal government each year by the last day of February. So last day of February, this is when all those taxes are due. Not taxes, all those are tax forms. I want to dig a little deeper. When I talk about S corporation, all tax forms you need to file, let's talk about state taxes, okay? And I think I've alluded a little bit to it when I mentioned the fact that you have to actually abide by the laws in every state where you are located. Again, when we talk about all the states where you conduct business, you got to have actually nexus. This is kind of important to actually. A nexus can be you having employees on the ground, you actually generating income from that state, and also all other kinds of business interest. So while S corporation profits are not taxed by the federal government, they are taxed by some states, and in other states, S corporations are assessed a flat fee. So that fee can be $500, can be $1,000, depending upon the state. In California, for instance, the fee can go all the way to $800, depending upon the niche that your S corporation is in. So in states that require S corporations to pay taxes or fees, you need to file separate state tax returns for your S corporation. And even states that do not assess S corporation taxes or fees often require to at least file an informational return. And some even ask you to attach your federal S corporation tax form, your Form 1120S, to your state tax form. Okay, so apart from federal employment taxes, most states also collect employment taxes. So to pay those taxes, you will need to set up a state withholding tax accounts for your corporation and report on and pay the taxes using the appropriate tax forms. Now, you can also pay those taxes electronically, not a problem. And it's just better to pay them electronically. Or if things are a little complicated for you, do not understand, it's better to outsource the whole operation to a third party. This can be a payroll service such as Gusto or QuickBooks or Wave, or it really depends, and they'll take care of it for you, or even Paycor. Okay, so you want to check your state's Department of Revenue or equivalent state office for more details on both of these state taxes. You also can find out more about state business income and employment taxes. Actually, if you go to your state revenue department, they actually have if they have some kind of notices to the public, you'll find all information there. Let me give you a few pro tips here. As we're talking about S Corporation, all tax forms you need to file, you need to understand that every S Corporation is required to file a return on Form 1120S. I've already established that. And so on Form 1120S, you have to state the items of the S Corporation's gross income and the deductions allowable, the names and addresses of all persons owning stock in the corporation at any time during the tax year, the number of shares of stock owned by each shareholder at all times during the tax year, the amount of money and other property distributed by the corporation during the tax year to each shareholder and the date of each distribution, each shareholder's pro rata share of each item of the corporation for the tax year, and any other information that the tax forms and regulations require. And those regulations might be different, okay? So it's really important to understand that you want to really start a little early, because if you are going to file your S Corporation tax forms and your S Corporation is in different states, multiple states for that matter, you will need to actually prepare things early, because you have deadlines too, right? The S Corporation Form 1120S is due by March 15th, whereas the Form 1120 is due by April 15th. So you have a delta of 30 days that can be really helpful here. But if you are an S Corporation, it's not going in your favor. So it's important to understand that S Corporation actually you have to really understand that it's one of those forms where you don't pay taxes, right? From 1120S, it's an informational return. You don't pay taxes on those forms, but the form itself is kind of lengthy. Think about 45 to 50 pages. I mean, that's pretty heavy here. So unless you are an accountant or tax expert, you should think twice before attempting to prepare your S Corporation's tax filings on your own, right? It's just one of those reasons why we always advise our viewers and our business partners, our business clients, to consider working with a knowledgeable tax professional. So when we talk about knowledgeable tax professional, there are 3 or 4 categories of tax professionals that really meet the criteria that we have in our mind. So you have a CPA, a certified public accountant, certified public accountant. You have an EA. So here you have an enrolled agent, or you also have a tax attorney. And in some cases, you can actually enlist the help of an experienced tax preparer to kind of help you out file your S Corporation. Even if the tax preparer is not licensed by the IRS, as long as they have the experience, they have been doing this for several years, and they know your industry pretty well, they should be good to go in terms of helping you file your S Corporation taxes. Thank you so much for your attention. I really appreciate it. In today's conversation, let me do a quick recap here. I was just talking to you about S Corporation, all tax forms you need to file. So I gave you the overview, and then I gave you the pro tips. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.